In 2005, a former doctor with a glass eye does something every expert on Wall Street calls completely insane. He bets over $1 billion of other people's money that the booming American housing market will collapse. At the time, housing prices have not fallen nationwide in living memory, so the entire world thinks he is a fool. His own investors are so furious that some of them threaten to sue him to get their money back. But this strange, awkward man has seen something hidden in the numbers that nobody else bothered to read. His name is Michael Burry, and within 3 years he will be proven right in the most spectacular way imaginable. Michael Burry is born in 1971, and as a toddler, a rare cancer cost him one of his eyes. He grows up with a glass eye, and he later says it always made him feel like an outsider among other people. He finds it hard to read social cues and to look people in the eye, so he retreats into numbers and books. Decades later, he will discover he has a form of autism, the very trait that lets him see what others miss. Burry trains as a medical doctor and works grueling shifts as a neurology resident at Stanford Hospital, but late at night, instead of sleeping, he writes about stocks on a small internet message board. His stock picks are so sharp that real Wall Street professionals start secretly following an anonymous doctor online. Burry calls himself a devoted student of Benjamin Graham, the father of value investing. His whole method is simple. Ignore the hype, read the boring numbers, and buy only what is genuinely cheap. He hunts for what he calls ick investments, ugly companies the market has wrongly left for dead. In 2000, Burry quits medicine entirely and opens his own hedge fund called Scion Capital. He starts with barely over $1 million, but money pours in fast as his bold bets keep paying off. Investors like the famous money manager Joel Greenblatt track him down and beg to back his new fund. Within a few years, the awkward doctor who hated eye contact is quietly managing hundreds of millions of dollars. In his first years, Scion crushes the market while the dot-com bubble bursts and other funds are bleeding. By 2005, Burry turns his obsessive attention to one thing the whole country believes can only go up. Home prices are soaring and banks are handing out mortgages to almost anyone who can sign their name. So Burry does something almost nobody else on Wall Street ever bothers to do with these mortgages. He reads the actual loan documents line by line inside the giant bundles of mortgages called bonds. And what he finds horrifies him. These bonds are stuffed with loans that can never possibly be repaid. He sees loans handed to people with no income, no job, and no assets, yet approved without a second glance. The bankers had simply stopped caring whether borrowers could pay because they sold the risk to someone else. Burry understands the whole machine is built to bury bad loans inside bundles stamped perfectly safe. Millions of these loans have teaser rates that will reset in 2007, and then borrowers will simply stop paying. Burry realizes the entire American housing market is a time bomb, set to detonate the moment those rates reset in 2007. But there is one problem. There is no normal way to bet against the housing market, so he has to invent one. Burry goes to the biggest banks and asks them to create a strange new contract just for him. It is called a credit default swap, and Wall Street treats it almost exactly like an insurance policy on a bond. He pays a small premium every year, and if the mortgage bonds fail, the bank must pay him a fortune. The banks are delighted to sell because they are certain that housing can never fall, so it feels like free money. But the Wall Street banks soon sense their mistake, and they begin to fight Burry at every single step. They refuse to mark his swaps fairly, pretending the rotting bonds are still perfectly healthy. For months, they essentially deny that Burry is winning, just to avoid paying him what he is owed. Burry pours over $1 billion of Scion's money into these swaps against the worst mortgage bonds he can find. But the housing bubble does not pop right away, and for nearly 2 years, Burry just bleeds those yearly premiums. His investors watch the losses pile up month after month, and they completely turn against him. They flood him with furious emails, demand their money back, and accuse him of betraying their trust. To stop the panic in 2006, Burry does something almost unheard of. He freezes the fund so no one can pull their cash out. He is now utterly alone, mocked as a failure, holding a bet the entire financial world insists is wrong. At home, the stress is crushing, and Burry survives on antacids through sleepless, anxious 3 a.m. nights. He stops answering his investors, stops defending himself, and simply trusts the cold math he has done. Then in 2007, the teaser rates begin to reset exactly when Burry had predicted. Years before, across America, millions of borrowers stop paying and the supposedly safe mortgage bonds start to rot. Suddenly the value of Burry's insurance contracts explodes and his impossible bet turns wildly profitable. The contracts he bought for mere pennies are suddenly worth many times what he ever paid for them. The same banks that laughed at him are now forced to pay him hundreds of millions of dollars. In 2008, the giant bank Lehman Brothers collapses and the entire global financial system nearly dies. Trillions of dollars in wealth evaporate and millions of ordinary families lose their homes and their jobs. The world plunges into the worst crash since the Great Depression, and Burry had seen all of it coming. By the time the dust settles, his fund has earned a profit of over $700 million for its investors. From 2000 to 2008, his fund returns an astonishing 489%, even after all of his fees. Over those very same years, the broad American stock market is essentially flat, returning almost nothing. Burry personally walks away with around $100 million from the single greatest call of his life. He had turned years of ridicule into one of the most legendary trades in the entire history of Wall Street. Over the full bet, his investors more than double their money, while almost everyone else is being wiped out. But here is the strangest part. Not one of those investors ever calls to thank him or to apologize. Burry is so disgusted by the whole experience that he shuts down Scion Capital and walks away from it all. Years later, the author Michael Lewis makes him famous in the best-selling book The Big Short. After the crash, Burry largely vanishes, distrustful of a system he believes never truly learned its lesson. He pours his money into unusual things, including water, gold, and productive farmland, far from Wall Street. In 2019, Burry quietly bets big on a forgotten stock called GameStop, long before the world goes wild for it. Once again, the awkward outsider had seen, years early, what all of Wall Street would only notice far too late. Years on, he resurfaces on social media under the name Cassandra, the prophet doomed to be ignored. He fires off warnings about fresh bubbles, then deletes them as if daring the world to listen this time. Whether he is right or wrong, the market now stops and listens whenever Michael Burry chooses to speak. So what exactly can an ordinary investor steal from the man who saw the crash before anyone else? First, do your own homework, because Burry beat all of Wall Street just by reading the documents everyone else ignored. Second, the crowd's certainty is no proof, and in 2005 all of Wall Street was certain Burry was wrong. Third, being right early looks exactly like being wrong, and Burry bled premiums for almost 2 years first. Fourth, expect to be lonely, because in 2006 Burry's own investors tried to sue the man who would double their money. And finally, protect your conviction, because in 2006 Burry froze his fund rather than let panic force a bad sale. Michael Burry never tried to look smart, charming, or comfortable in front of the people he was right about. He just read what others would not, believed the cold numbers, and held on while all of Wall Street laughed.